are you?
Hello, hello.
I see 11 people now. Friday night, there's usually more people online. Yeah. Hi, everyone. Just say where you're from. So, yeah, I have here Clay with me. Recently partnered up to do tax work together. And then, so today we're going to talk all about the fun topic about taxes. So, why don't we start with
Yay.
why don't we start with you? Okay, I forgot my microphone is out of my ear. So why don't we start with you? Introducing yourself, Clay.
Yeah, I'm Clay. Hello, everybody. I do taxes. I'm in the Sacramento area, and I have lots of fun working with all kinds of clients all over the place, do all kinds of things, and I'm sure we have lots to talk about today.
Yep,
My
I'm
favorite
sure we
color
have.
is blue. There we
Yep.
go.
Okay. So why don't we start first by I think like I know you have a master's in taxation, you're also an enrolled agent like me. So you do a lot of business stuff and individual. So let's talk more about individual first, and then let's kind of go talk about the S Corp and LLC in a bit. And then for anyone, just say if you have any question, just put in the comment, and then Clay will get to it. Okay, so why don't we talk about how what's your common issues with your individual tax returns that you normally get? I know you have at the probably hundreds tax returns. So what trend have you seen regarding common issues?
Ooh, common issues. Yeah, that's a good question, actually. What kinds of things are most common? Um,
Mhm.
what's happened the last few years is you had this massive change in the tax code, and you had a lot of people that kind of got caught off guard because their
Yep.
withholding didn't quite keep up, and they may have ended up paying less tax, but there was not enough withheld, and so they got this surprise bill out of nowhere. So common issue every single year is for everybody to take a look at things and
Mm-hmm.
uh, do their W-4.
Yep.
So if you're earning wages, you tell your employer how much tax should come out, and that's all driven by a one-page form that goes in that kind of figures out how much tax to withhold from payroll throughout the year. So that's pretty common. Um, we get more on the business side. Common issues would be like number one question as a business owner is what's mine, right? If I make money, what's going to go to tax? What's going to go to me? That's kind of the number one question. So, yeah, it's
Mm-hmm.
good
Okay.
starting point there.
Okay, so let's go with W4. So I know the W4 has changed. Like, is it as easy as like you just fill in, okay, so let's say you're single, you put single there, and then and then you pretty much, I think it's very, very simple now. You just put single, and then if you don't have any deductions or you don't own any home, you don't have any additional income, you just kind of put it there, and then payroll would just kind of calculate it based on that single. You don't even have to put one, two, three, four anymore like before.
Yeah, it used to just be this like they called them they were called allowances, right? One, two, three,
Mm-hmm.
four, and it
Yep.
was always just kind of obscure. More allowances was less withholding, and it's a little bit the concept's a little bit more simple now. I don't think the form is that much simple, especially if you have like a taxpayer and a spouse both earning. The problem there is you have to kind of factor both of them in. So that's when you get into the other worksheets in there and you have to kind of dial it in better. Um,
Mm-hmm.
I do some of that every year where someone will reach out and say, how much withholding do I do?
Mm-hmm.
And if we can't get an answer from the W-4 that's kind of straightforward, then we'll actually do a tax projection and say how much we think you're going to make and
Mm-hmm.
how much should come out, how much have
Mm-hmm.
you paid in for the year so far, and what should you catch up on. And it gets a little bit more specific and dialed in that way.
Mm-hmm.
So, but
Yeah.
that's really involved and that takes a lot of time and not
Mm-hmm.
everybody needs that at all. So
Yeah, and I remember we did several tax projection work already on RSU and ISO. So when should people come reach out to us when they have some tax projection work? Actually, I think it is the best time now because it's what, yeah, November. Well, it's
yeah,
November now, so there you have 2 more months to go. So guys, if you have anything like important, you're not sure how much you're gonna owe, whatever. So it's the best time to reach out to either me or Clay. So we work together on some of tax projection issues. So if you're not sure, because we already had some clients like came to us like asking us about ISO, what's the impact, and RSU, and all of that. So, do you have anything to say about tax projection stuff?
Yeah, well, perfect time to do your tax
Hmm.
projections.
Yep.
I would say the best time to do a tax projection is any time of the year, right? There's
Yep.
not a bad time. Well, because sometimes, like right now, if you have a withholding problem, the year's already kind of over, and you're not going to catch up the whole year of withholding if you're super behind. It just kind of gives you a heads up on it, and then
Hmm.
maybe you can fund a retirement account. There's some options you can do on the individual side. So, yeah. But this time of year, especially if you have a business, is the perfect time to do it. And
Hmm.
for a lot of clients, we'll do it a few times during the year, just because their business is, kind of up and down, and we want to make sure that we're not getting too far behind, and we want to know what's coming down the road. And the big thing is that if you do it before the year's over, there's certain things you can do. If you wait
Hmm.
until the year's over and we have this chat in March or April or February, then there's still some things you can do, but less things, right? And so we look at tax planning as kind of giving us a peek into the future, and then we want as many levers to pull as possible to either get the tax down or defer the tax or do
Hmm.
something with it, or at least know what it's going to be so you can plan for it.
Okay. So now that we're talking about business, so this is one of the questions I always get asked a lot. So like, when should they switch from sole proprietorship to S corp, and when do you need an LLC? And then maybe let's talk more about different entities first, and then we talk about this sole
Okay.
proprietorship to S corp.
Yeah. So business entities is a whole separate set of things. And so, yeah, when you start a business, you're a sole proprietorship.
Yep.
You literally have to do nothing to start a sole proprietorship. You just say, I'm a business, and that's it, right? And whatever you're doing it hits your individual return,
Mm-hmm.
and it's all kind of in one place. So once you get to a certain point, then you're paying a lot of tax. You're paying a lot of self-employment tax, which is your Social Security, Medicare taxes, and that can add up real fast. So on 100 grand of profit in your business, you're going to pay your ordinary tax rates, which might be 20, 22% on the federal side, another 9 or 10 to California. Then you eat another 15% to self-employment tax on top of it.
Yeah.
So another 15 grand roughly out of nowhere. And that
Mm-hmm.
really hits hard, especially if you have this first big year as a business
Mm-hmm.
and you get a tax bill you're not expecting, right? And you may have already used the cash to grow the business or whatever, right? So it requires a lot of planning to get in front of it. So once you switch to a different entity, you can switch to a partnership, you can switch to a corporation that is its own self-contained taxed entity,
Mm-hmm.
or you can also do what's called an S corporation, which is uh, doesn't pay any tax except a
Mm-hmm.
little bit to California. Everything gets taxed on the individual side. It's what's called a pass-through entity. So it still has a separate tax return, but you pay the tax on your end. It kind of flows through to you. So yeah, and then there's a separate thing called an LLC, and that actually doesn't exist in the tax code, which is awesome.
Mm-hmm.
It's a legal entity, and it gets to decide how it's taxed. So it can be taxed as a sole proprietorship, be taxed as a partnership, be taxed as a corporation, be taxed as an S corp. It can choose any of those choices, which is great. So there's also kind of a legal side to what we're doing, and there's a tax side. So if you're working with somebody like us, we're solving the tax side and driving the decisions we're making based on the tax side of things. But you also want to sit down with a business attorney and say, hey, is this also compatible for legal liability? And are we protecting ourselves? And there's a whole list of other things to do on that side. So you kind of want to work on both sides of that and make sure things are done right. And yeah, and then we can do anything on the tax side as well. So if you go to an attorney and they say, form an LLC, Then
Yeah.
we take the LLC and we do something with it, right? We figure out the best way that the LLC pays tax.
Mm-hmm.
But like it depends what you're doing in your profession. Like sometimes there's restrictions on the type of entity you can use. Like if you're a doctor, then they make you use a professional corp.
Mm-hmm.
So yeah, it gets specific to each industry. But yeah, planning wise, when you pull that trigger, it starts to happen around 40 to 50,000 in profit. That's when you start to get in the range where it starts to break even on the savings you get from a different entity versus all the added work that we do on our end, right?
Mm-hmm.
So
Yeah.
if we set up an entity for you, do all this extra work, you pay us more money. And if there's not savings to justify it, then it doesn't make any sense. So
Mm-hmm. Yeah.
yeah.
Okay. Okay. So someone, Douglas, just asked a question.
Oh, cool.
Douglas Harper. So for individual tax return, in the past, I would donate, say, a car to the Kidney Car Foundation. Now, with the Trump tax situation, is there any benefit? Church offerings, are there loopholes similar in nature so that I can only pay $750 like Trump? Okay, what's your
Well,
take?
well, yeah. You have to lose millions of dollars and carry forward those losses from prior years. Like give you just the totally neutral tax side of things. He lost a bunch of money at some point, and if you lose money in a year and it exceeds the income, then it carries over to future years. It's called a net operating loss, and that's a feature of the tax code. That's not a loophole. That's not evasion. That's not avoidance. It's just you have to balance this idea that taxation is year by year, and there's a hard cutoff, right? It's the end of the year, like it's the tax return's over, right? You have to balance that with the fact that not all transactions in businesses fall into this perfect calendar year, and so you can have a business that's starting, you lose a bunch of money the first few years. If you weren't able to take those losses and balance them against your profits in the future, then it's you're kind of missing something. You're missing kind of the whole point in the tax code. So that one's not a loophole. But whether you lose money and consistently lose a bunch of money and bankrupt businesses is a whole separate issue, right? But yeah, in terms of loopholes, paying $750, I don't know. I haven't looked at his tax returns. I couldn't tell you exactly how he did that. But yeah, so I mean, if you're going to donate a car, then you get the donation for essentially what they sell it for, if I remember correctly. So you donate the car to them, they sell it at auction, and then they sell you. Then they send you a form that says, "Hey, here's how much it was worth," right?
Mm-hmm. Yeah.
Whether you can take that or not is a function of whether you can itemize your deductions or not. And actually, something this year that's new is you're going to get up to $300 in cash charitable contribution as a deduction against all income. And so that's something to think about before the end of the year. Give $300 to your favorite charity, and you can take that against all the other income as a, something above the line, which is great. So yeah, I don't know. Neither loopholes there. It's like, it just comes down to whether you're itemizing or using a standard deduction, or maybe that's way too much info, but yeah. So if you want to only pay $750, start a business and lose a bunch of money and carry it forward. That's my response there.
Okay, Douglas. Hopefully that answer helps. So, okay. So for in terms of business, Clay, uh, like how much loss can you claim in a business, and then like for how long before it starts triggering an IRS audit?
Yeah. Well, there's a whole set of rules for hobby loss. Technically, it's 3 out of 5 years. I've never been through a hobby loss audit, right? But that's the on paper version of it, right? If you have a business and you're not making money after that long, then right, maybe you don't want to be in the business. So I don't know, but I don't know if like there's technically probably some threshold where it triggers an audit. Um, that's all based on them comparing your return to other returns and calculates a diff score, and certain things can trigger an audit. So the important thing is, we do a little bit of like packaging on certain returns, and to like avoid certain things. But if you have legitimate business expenses and you have the records to back them up, then you file it as it is, right? And then in that scenario, there's not a limit to a business loss, right? So part of it is how well you're keeping all of your info and records, and that's something we do for a lot of businesses. Is we do their bookkeeping, and so we have a very specific process where we gather all of their info and archive it, and so we can go back and look at every check image for the entire year, see detail on any expense. So we have the statements to back it up, and we have the checks to back it up, and so it's all there if we need it. So that's part of it. If it's a legitimate business expense, then in my opinion, you shouldn't be afraid to take it. But there's definitely some packaging you can do to avoid an unnecessary audit that just comes out of nowhere. So.
Got it. Okay. So what's can you explain what hobby loss is for those who doesn't know?
Yeah. So there's a distinction of whether you have a business or whether you have a hobby, and that gets into a specific list of things that you can do to make it look like a business. Do you have a business plan? You have a profit motive? You can do lots of things to kind of, make your business more legitimate in the IRS's eyes. Like, do you have a website? Do you have business cards? Are you registered? Do you have a business license? All of those things can be part of that. So, every circumstance here comes down to a facts and circumstances test. So like there's not one size fits all answer for like, is it a hobby or is it a business? There's a list of facts and circumstance tests that they'll go through to help them figure that out. So you can find that stuff online. You can find those tests online.
Okay.
And certainly like, try your best to tick every box. So, yeah.
Cool. Okay, so I know you touched a little bit about bookkeeping. So like so I know Clay, you're the type of person when you work with a client, you like to have a long-term relationship, and it's not like just TurboTax, you go to like I don't know, what are all those H&R blocks. So it's like you get assigned to like many different people, right? You're not really assigned to one person. So how do you really I know some of your clients, you actually do their whole year bookkeeping, whatever. So you kind of do like everything already. So what's your approach and your relationship typically with clients? Like, can they just call you throughout the year? Like, how does that work?
Yeah, and I guess I'll just give the disclaimer. Like, we're not disparaging H&R Block or those guys. Some of them are like seasoned professionals. They also do have a lot of turnover, right? So, like, you could have an HR Block office that has like a CPA has been doing it forever, and that's just how he does it or how she does it, right? It's not necessarily a problem. What I try to focus on is, when I get a new client, the first thing we do is go through their last few years, at least the last year of their tax return, and we review everything, see what's there. We need to know what to look for. That's an important reason. But we kind of look it over and make sure that there's nothing weird going on. And every now and then there's something that's like, hey, we can go back and change this and save you some money. So our approach, seeing other preparers and like working with other preparers, I see a spectrum of tax professionals. On one side of the spectrum, you have people that will just take your numbers, punch them in, spit out a return, sign the return, great. See you next year. And that's okay. That can work for a lot of people. If you have something more complex than just like a W-2, then a lot of times, and you may have like questions throughout the year, and you want to reach out. So we're kind of on the other end of the spectrum where we want to be proactive throughout the year, and we want to work with clients throughout the year. And my goal is for clients to call me before they do something, and at least just have a 5-minute call. And I'm not going to send them a bill for 5 minutes, right? And so that kind of comes down to like how we're pricing our engagements. We do something on a fixed fee, and that way you can reach out. It's not an hourly thing. It's not like a by form thing. It's just, and we get better results out of that because someone will call us and say, hey, I'm thinking of buying a building for my business. And what does that mean? What do I do? And so then we'll have a discussion about it, and we'll, have some specific advice. And maybe it's something that we have to deal with months down the road, but we're at least having a conversation about it first. So that's really important, because if you do the thing that is a taxable event, and then we have a conversation the next year when we're doing the return, we can't really do anything about it at that point. So like if you pulled money out of retirement early, you're thinking, oh, I'm going to buy a house, and I got to do a down payment and have this money in retirement. It's in my 401k or whatever. And you think, okay, I know there's a penalty there, but we're just going to pull it out and deal with the consequences later. I actually had this conversation a couple days ago, so that's probably why I brought it up. And they're like, yeah, we withheld like 20-30% on it. I'm like, oh, that's not going to be enough. And they'd already done it, right? So it's a done deal at this point. But the reality there is that it could be closer to 50% once you add up the tax, federal and state, and a penalty, federal and state. And so they're thinking, oh, we have about so much money to use on the down payment. If we had a conversation, I would have given them a different number and helped them plan for it. So we want to be proactive. This is especially important for business clients, but it's also super important for other people too. Like if you're getting stock incentives from your employer, there's careful timing of like when you exercise and when you sell, and that you can trigger tax. Like with ISOs, you can trigger tax without even selling the stock, without even realizing a gain. And so that's the proactive approach. Like we want people to call us, and we want to be on the other end of the spectrum where it's you reach out and we can have a conversation. We want you to call us anytime. For my clients, I just have a little link in my signature, and they can jump on Calendly and grab an appointment that's available. And because sometimes you call us and like might be doing something else, right? So you jump on the appointment, and then it's a set appointment. It's just a half-hour block is all. So
okay.
Yeah.
Cool. Thank you. So Casey said, I just joined in, miss when to change on SCorp. So it is recorded, Casey. So you can just go back to Facebook or YouTube or LinkedIn. Okay.
Yeah.
All right. So Jesse,
to give Casey the 30-second version of that, it's driven by profit, and it's also driven by whether it's appropriate for your type of business. So it's not one size fits all.
Yeah, and then Casey, if you ever have some question, you can always reach out to me or Clay and then set up a time if this is something you're thinking about for your business. Okay. And then Jesse said, please comment on the benefits and problems associated with rental properties, losses with status as a real estate professional. Any upper limits on losses?
That's a good question. I don't deal with a whole lot of like real estate professional losses on there. So I don't know if I have a cut and dry answer there. So the standard treatment is real estate's passive. So that for everything, all real estate is passive. And there's a limit on passive activity loss that came into effect in '86, and everybody was, putting things into huge losses and taking tons of losses.
Mm-hmm.
So they put a stop to that. And then there's these special carve outs from there. And one of those carve outs is if you have income under a certain level, and I don't remember the exact number, but let's say it's between 100 and 150, you can take up to 25,000 as a loss against your other income. All right. So that's the first carve out. And then there's a carve out for real estate professionals. Basically, you're saying that this is my business, this is what I do, and then you can go from there. And I don't know the limits there. I have to look that up on the fly. But
Yeah. So
yeah,
yeah, there's a lot of things, Jesse, about the tax code that we can't memorize. So usually, like, when people come to us, then we'll have to do our own research as well. And we don't claim to be expert everywhere.
yeah,
Okay.
that's a disclaimer. Yeah, right. It's
Mhm.
like my goal is to never just give an answer. It's when I don't
Yep.
know something to say, hey, that's a good question, and I want to take the time to find you the right answer for that. Right.
Yep.
So rather than just like
Mhm.
say, yeah, you can deduct everything.
Yeah, to zero income, that's possible. Yay, just file your taxes. There are, I have had clients where in like they went to tax professional. One was an employee, and then like the tax professional actually deduct their home and all kinds of stuff that they're not supposed to deduct as an employee. So it's like there are tax professionals out there who will just tell you, oh, you can deduct this, deduct that. So just be careful who you hire. Like so, like you should probably hire enrolled agent or CPA, and then someone with credential because not all states require credential, right? Clay, like, I don't know how many states actually require a minimum for you to even charge on doing taxes.
Yeah, it's like two or three. I mean, everybody has to have
Mhm.
a number from the IRS, but there's no like, well, and the IRS tried to do this on a national level, but it got struck down. But
Mhm.
yeah, California, New York, I think Oregon have they have like a state preparer license
Mhm.
that they do.
Yeah.
Um, but yeah, so certainly you have a better chance of getting a good result with somebody with a credential. Um, I think what's important is somebody that has experience. If you have something specific, they have experience in your specific thing. Um, and referrals are always great, right? Like I get most of my clients off of referrals,
Mhm.
um, and it's clients of mine that are happy. And then whenever they're having a conversation with somebody they know, it's like, oh, call my person, right? So that's a good
Mhm.
way to find a good prepare.
Mhm.
So,
Yep. Okay. So do you have any other last minute word for people, advices about their taxes?
ooh, last minute advice, free range question. I don't know. Yeah, I mean it's close to the end of the year, so
Mm-hmm.
if you have a question in your mind that you're not sure if this year is like, if you have things set up correctly, then yeah, feel free to reach out. And great time of year to do a tax projection. Um, I think most people kind of want to ignore it till after the holidays, because sometimes we ruin people's holidays, right? We do a tax projection in December, and it's like you're gonna owe 10,000 in April, and then it's like, well, sorry, kids, can't do Christmas. So, but
Yeah.
like I said, the right time to do a tax projection is anytime if you're worried about it.
Mm-hmm.
And
Yep.
the way we do it is we do an actual tax return, do a mock tax return of where we think your income is going to be and deductions are going to be. And it's easier to do that at the end of the year because most of the year is already over.
Yeah.
And you can crystal ball a month a lot more accurately than doing 11 months. So, yeah.
Yep, yep. Okay. So I just yeah, so okay, so the last thing is how can people find you? And then if they have any they just want quick consultation or whatever, or just like reach out to you, like what's the best way for people can find you or reach out to you?
Best way to reach out to us specifically is LinkedIn or your website or Facebook or my website. Um, yeah.
So what's the website
Yeah.
name? What's the Facebook name?
So, well, I don't remember what yours is called, but Mine is cwi.tax.
Hmm.
So C as in Charlie, W as in whiskey, I as in incorporated.
Yeah,
And
that's
okay.
Clay Welch Incorporated, CWI.
Yeah.
Okay.
Yeah.
Yeah. So, and I also tagged you on this LinkedIn Live. So for people, anyone if you wanna, reach out to Clay, just connect with him. And then me, I'm from Take Financial Coaching. It's in the upper right. You can see the emblem. So yeah, and you, you can always reach out to me on LinkedIn as well. So
Yeah.
Clay, yeah, unless you have anything more to say, so I really appreciate you taking the time to talk about tax, educate people about taxes. So this is really helpful.
Yeah. No problem. We,
Yeah.
we, live, we live and breathe tax.
Yep.
And for another half hour or so, then it's the weekend. And,
Yeah.
we take
Yep.
time. We don't
Sounds
talk
good.
about tax when we're enjoying the weekend. But yeah, that's all I got to say. Happy Halloween, everyone. And feel free to reach out anytime.
Yeah. All right. Sounds good. Thank you, Clay. Have a great weekend, everyone. It's
You
Friday,
too.
so enjoy it. Okay. Bye,
Thanks
Clay.
for the questions. Goodbye.